November 22nd, 2024. So I'm doing another live trading video today. We had a gap down and a wedge bottom, or sorry, a gap up and a wedge bottom yesterday, and then a bull trend for the remainder of the day. You can see we're basically in the tight trading range from yesterday. So probably started on bar 42. I mentioned in my video yesterday, but I'll mention it again. Spikes and channels. The bottom of a channel is the start of a trading range. So you have, excuse me, you have a bull micro channel from 33 to 41, and it's a strong move up, 11, 12 bar, or however many bars, 10, 11 bar micro channel, and there's buyers below the first time, and you get a bear close. So when this this bull micro channel stops, to me, that's probably the start of a trading range. And then you can see you get a spike and a channel, and the bottoms of channels are typically the start of a trading range. So you can see 42 was the start of the channel. It's obvious that 42 is the start of the channel. Once we've started to rally a little bit, you can see that this is this area where the bull channel started. You can see it's a channel because it's getting pullbacks. It's not rallying as strong as it was here. So bulls are becoming more efficient with the way that they're buying. And we sold back off, you can see on 58 and tested the 42 low. So we tested the exact bottom of the channel and then bounced again. So you can see we tried to break out below on bar one and failed. That's where we're getting a big bull bar. I think the weekly chart, let me just pull up. This is a 15-minute chart. I've been trying to just pay more attention recently to just the 15-minute chart and instead of the hourly chart as well. I usually glance at the hourly chart, but I'm trying to think more about the 15-minute chart. You can see here a trading range, a breakout attempt below, but it fails and we get a bounce back up into the trading range. The weekly chart is important because today is the last day of the week. I just turn off the open interest thing. I don't even know what that means. Oh, that's the monthly chart. All right, the weekly chart. Been in a bull channel for a little while now, and we got a good rally here, a pullback, a second leg up, but the 11-4 bar, as much as it is climactic, you know that a really climactic bar at the end of the trend has a 60% chance of one more leg sideways to up and a 60% chance of testing down after that one more leg. So 60% chance when you see the close of 11-4 that we're going to get one more leg sideways to up, and 60% chance we're probably going to try and test somewhere down here. When? I'm not really sure. I mean, the second leg up could look a variety of different ways, but I would imagine we probably have to go at least one tick above the 11-11 high for most traders to consider it tested. So consecutive bull bars on the open, 1 and 2. There should be buyers below 2. If we go below 2, do you want to buy the close of 2? You probably can. 50% chance that you're going to get follow through buying on the open after a bull trend day, but it's really not amazing to buy the close of 2. The large tail and the fact that we're in the middle of a trading range. So when we're in a trading range like this, instead of buying these closes, it's probably better to buy below the bars. The daily chart. It's possible that we're getting a vacuum test. You can see the high of yesterday did not quite reach this low, the 59.8675, or 59.9175, whichever low. I think 59.9175 might be a little more important, but it's right up here. So if we get 3 bull bars on the open, 3 bar micro channel, increased chance of a second leg up. So we have a good looking surprise so far on bar 3. If it closes above the 69 high, then it'll be a breakout. And so far, the breakout pattern is big, small, big. So we have a big bar on bar 1, small bar on bar 2, and then it looks like we're going to get a big bar again on bar 3. Again, there's an increase, there's a decent chance that we're going to get, second leg up from this. So I think if we trade below 3, there'll be buyers. Do you buy this close? Well, a big, small, big pattern usually means that there's going to be a pullback. So it's a bit difficult to look to buy this close. But if we get one more follow through bar, I'll probably buy. Or if we get a bear bar on bar 4, that would be a reasonable buy. but you can absolutely just buy the close of 3 here. Climactic bar though is the problem. You get I don't remember what day I was looking at. I was looking at some day yesterday. I was studying, and you get a climactic, but this isn't really a good example of that actually. Okay, here it is. This isn't the day I was studying. This is a similar enough situation where you get a micro channel and then a breakout above the channel. 60, 61, and 62 is a bull channel, and then 63 is a breakout attempt above the channel. So you have to imagine that there's buyers below bar 63 if we get there. So breakout attempt for the bulls. Okay to be long for a second leg up. I wanted to buy a pullback. Looks like we might have to, or I might get forced to buy at the market before is another bull bar. These micro channels on the open, my leg one, leg two study, this is actually a very specific situation that I wanted to do more in-depth study on micro channels on the open, where you get 3, 4, 5 bull bars on the open, because a lot of times there can be pretty violent reversals. So if I do take this buy, I will be quick to get out, rather than just hold indefinitely like I do a lot of times with a lot of my trades. Like yesterday, I with this type of trading, I bought the close of 18 yesterday, and this, even though 26 needs a second leg, the first time the Bears need a second leg, I generally tend to stay in the trade because there should be a bigger second leg coming. So even if the Bears should get a wedge pullback or something like that, it's okay to just hold. But over here, like bars like 50, where the Bears need a second leg, well, now it's not really all that great. So we did test that magnet above. This is a bear bar that's, it's about this size. If it closes anywhere near its low, I'm probably just going to buy the close of it, to be honest. If it's a bull bar, I'll probably buy the close. If it's a bear bar, I'll probably still buy the close, just getting that better price. You might buy smaller if it's a bull bar and look to buy more below the bar. It is climactic. I think the context is climactic because the probability of another strong bull trend day today isn't super high, but this whole rally needs a second leg. So we were paying attention to this. You can see we slowed down there a little bit. The chart might be trying to rally back to the close of that 11.4, which would be still 40 points above. So a long way to go, but possible. Obviously, the bulls want to both close, but 1 through 3 is going to get a second leg. It's kind of just a question of how big would the pullback be, and where our trader is going to look to buy. Oh, that was loud. That turned out my sound. I did just buy. I think even if we pull back below 4, there's going to be buyers below 4. Bears don't need a second leg from 4. It's actually a bull close on the SPY. It doesn't matter. I don't trade the SPY, or I do trade the SPY, but I look at the Emini chart. But it is actually a bull close on the SPY. I considered trying to buy below 4 or buying smaller where I did, and then buy more below 4. But I ultimately don't think it's going to matter that much. The traders bought the 50% pullback instead. I'll show it on here. Down around here. Suppose with the bear close, the momentum, kind of the game you're playing with breakouts is trying to figure out when to buy the close, when to buy a small pullback, and when to buy a 50% pullback. But either way, I think we're going to get to a new high. I'm going to pause the video. I'll be back in like 10 minutes. Sorry about that. So I bought a little bit more. I'll get the exact. The reality is I bought a little bit too big the first time. So I bought around here, maybe like a little bit below the tail. So I bought somewhere in this area. I bought my normal position size, and then I bought like half of that down here. So I think the reality is I should have bought a little bit less up here and a little bit more down here. The real key to trading is figuring out what breakouts need a second leg and how to effectively capture them. I already said that, but hold on. 13. I'm going to exit the piece that I bought down here, up here. And then the other piece that I bought, I'm going to keep on. Type some stuff in a second here. I was thinking about, I mentioned the big, small, big, and it should pull back first, but I think that really, the knowledge for that, I haven't honed in on enough quite yet. So I probably have to spend a little bit more time thinking about microchannels. And so I think I was just writing in my notes to make a study on when I see big, small, big, what should I be expecting? And so I should go back and check out all breakouts in the first 3 bars of the microchannel and how those tend to work. Bar 7 here, so could move a good amount. In the future, I probably should wait until after the first 7 bars to trade. I really try to, but sometimes I just get a little bit eager because bar 7 can be obviously there's possible news reports, and so the bar can move in all sorts of ways. But it's possible that 4 and 5 is getting a second leg now during 7. My stop is still below 1, but I don't really see any reason why I can't put it below 5. I'm kind of just thinking about it right now. I'd like to see us go above 4 first, and then I could put it there. 6 is a strong close, which is good. So, moral of the story is I'm going to spend a lot of time, not this weekend, I'm a little bit busy this weekend, or at least Saturday. Maybe I'll spend time Sunday and just work on, microchannels and think a lot about those kind of studies. I've been looking for a sort of a new study to do since I'm studying breakouts a lot. But I studied, a very specific type of breakout, which is good. That's what you're supposed to do. But it's these 4 or 5 bar micro channels and the odds of their second leg. And I've been doing that for a few months now, and I'm starting to get to know that system pretty well, which is good. But ultimately, um, I think that a 3 bar microchannel study would be different enough and do enough good for me that I should, it's worth doing. So bar 6 is probably going to get a second leg. It could be part of the second leg from 1 through 3. We should go above the 4 high. Management on this is pretty easy for the most part, unless 7 closes on its low, which it might. I'm kind of trying to think that scenario through right now. Problem is 6 is really strong. Problem for the Bears anyway. That's the problem with exiting below 7 here. That 6 is really strong. Looks like 7's going to be strong enough for a second leg, so I'm going to have to get up below 7. Really should stop trading the first 6 bars because this is the problem with bar 7. But we're probably going to go back up here. I exited below 7, but the reality is there's probably buyers. I do think we get back to the 6 high. But I think that 7's going to get a second leg, so that's why I exited. But It would have probably been okay to stay long, and if 8 was a big bear bar, then get out of that. Are we always in short? I don't think so. I think that 7 probably needs a second leg, but I think the Bears kind of need 8 as well. So if 8's a bear bar, then I think most bulls will exit. But 6 being this big is kind of an issue for the Bears, I think. So I think a lot of the bulls who were holding might start exiting their longs here. So 7 and 8 consecutive bear bars, good for the Bears. We're probably going at least a little bit lower, but probably better to wait. Hard to sell after 1, 2, and 3. Kind of surprised we did not get to a new high of the day. If you're still long for any reason, you have to get out below 8. And you can see that's why traders are buying the close of 8, because on the off chance that we just rally straight up here, don't go below 8. Okay, we went below it. But on the off chance that that's what happened, I think that, those bulls could stay in. So I think that the bulls exit below 8, and we're flipping to always in short below 8. So even if, this ends up being a bull bar, I still think it's probably 7 and 8 going to get a second leg. So I think the problem though is that the bar 6 close is an area where we should probably get back to, because bulls, let's say you bought, or you weren't quite sure to buy the close of 3, and you wanted to wait for one more bar, and you didn't get it on 4 and 5, but we're still always in long on 4 and 5, so you wait for a bull bar closing near its high 6, you buy the close of 6, and then you get 7. So I think the bulls who buy the close of 6 and scale in are going to make money. The reason I say that is because I think it's not a bear trend day. I think it's a trading range day. It's possible that only getting one close, possible that if 4 was a bull close, it would have been a lot better. First close above the high of the trading range could be disappointing. If 9 closes strong, we're definitely always in short below 8, but it's just not ideal. Maybe momentum traders sell below 8, and if you are a momentum trader and you sold below 8, how do you feel about 9 so far? Not great. So a lot of those traders might buy back their shorts. Bulls are hoping it's a double bottom, 1 and 9, but 7 and 8 is going to get a second leg down. But it's a question of how high up do we go, right? Because the bar 6 close is still a magnet above. So some traders, instead of selling this close, they might look to sell the high. So they might look to sell the bar 6 close with the stop and measured move up and get back down to this area. Okay, so 9 being a bear close, I actually think is important. It means that there was follow through for the Bears. The Bears who sold the close of 8 got follow through on 9. Now the Bears want 10 to be another big bear bar that looks like 7 or 8. If it is, there's an increased chance that we get, a little bit more sideways to down trading. The bar 6 close is still bothersome, I think, but reasonable to be short. Some traders, maybe they sell the close at 9, but it's not really a great trade to sell the close at 9. The only reason you do that, if you were trying to avoid a trap on 8 and you get 9, now you have 3 straight bear bars, 7, 8, 9, but they're shrinking bodies. So you are confident that we're going to continue down, but I don't think 10 is going to be a big bear bar. So looks like it's a little bit disappointing so far. So I think that a lot of the disappointment for the Bears is because of our six. Tells me we're in a trading range open. But 10 is another bear bar. So four straight bear closes means what? Bears will sell. This is going to get a second leg. But where will the bears sell? Is the question. I'm looking to sell, but I might be selling a couple points above. I'm going to sell small. If I do sell, if it gives me the chance. Also, if 11 is just another bear bar, then that's going to be a system trade for me. So I'm just going to sell the close and do with it what, let it do what it's going to do. Usually, usually I try not to take system type trade at the top of trading range, but or the bottom of the trading range. But this is, if it gets 5 bar microchannel, it's going to get a second leg. So So a large tail, right? Going to be hard to sell the close of 11 if it looks like this. Just need like any sort of decent bear bar, otherwise I'm probably just going to sell a pullback. Is it still a signal for me? If it's any bear close, it's probably still a signal. Because the reality is, even if we pull back, there's going to be buy or there's going to be sellers somewhere above and try to get a measured move down. But I'm going to wait. This isn't big enough for me. If at 11 close near its low, then yeah. So 11, the bulls have a double bottom, 1 and 11, with a neckline 4 high. Sorry about that. Neckline 4 high. Again, I can make an argument that 10 was a signal for me, but really difficult for me to want to sell that. One of those ones I'd probably just rather sit out. I think it really all comes down to bar 12 here. If bar 12 is something really disappointing, I think any trader who's short is going to bail. It's looking like a possible second leg trap at the bottom of the trading range. So you have to keep that in mind, but we are always in short, so we're probably going at least a little bit lower. 12, a big enough fair bar that we're going to go lower. We're really early on in this bar, so it might get sold off at some point. Wouldn't surprise me if it was a bear close. I do think this was my signal, and I know that I would exit above 13 if it's a big bull bar, so I just shorted. And if 13 closes on its high, then I just get out. So this is very easy management. So if 13 is anything disappointing for the bulls, then I'm going to stay short. I think 12 will probably get its own second leg. And my profit target is a measured move of 7 through 10, since I got in around the 10 close during 13. And the measured move is right here. So just basically if it gets below 12, I'll be good. But I would like to see 13 be a bear close if possible. But even if it's this size, or it looks like this, it's probably still fine. And basically, you just wait. And if 13 closes like this, I'm just going to give it another bar. And if 14 is a big bull bar, then I get out above 14. I actually got in a tick or two worse than the close of 10 because I hesitated. I set a limit order, then I canceled it, and then I ended up selling the market. So that's pretty much all I can ask for out of 13. If 14 is a big bull bar, then I get out above 14. But we are always in short right now. Pause the video for a few minutes and just wait through the bar. There's nothing I'm going to do here until 14 closes. All right, so that's kind of the one thing you're not looking for, and just kind of part of it happens sometimes. So, kind of the risky run that bears buyback shorts. I don't think it's all that likely that you get bar 14 like that. I did mention as sometimes you need a big bull bar on high, but it doesn't seem super likely, but ended up getting it there. And it just makes more sense to exit above 14. Even if this continues to pull back, there should be buyers at the 13 high willing to scale in. So probably not going much lower. 13 and 14 is going to get a second leg up. Very, very likely. All right, two small losses on the day to start out. I think either thing I did was unreasonable, but 14 probably makes the market somewhat always in short. Thirteen through 15, three straight bull bars. It's going to get a second leg. This is looking like tight trading range behavior. Slowly getting lower lows and lower highs. So weak bear channel, but not really any good context for a bear channel. This might be due to this trying to get back up to the bar 6 close. Let's see. I would imagine there are buyers at the bar 13 high if we get there. Again, important to just work on catching the second leg. We get more consecutive bull bars than I'll buy, but it doesn't look like we're gonna. It's kind of hard to buy up here. 16, a bear bar, but there's gonna be buyers as well. Trigger it. There's buyers at the 13 high. I'm not sure if we're getting there though. This is too obvious of a leg one. You're gonna need a second leg up. Either way, 3-bar bull microchannel. Some bulls buy the close of 16, just basically thinking, you know, 13 through 15 is going to get a second leg, so they can just buy the close. And that's what's causing 17 to rally. Seventeen. Some traders would argue that 17 qualifies as the second leg up. I think we are always in long. I think it's pretty obvious we are always in long. You make your life a lot easier in general if you only trade in the always in direction and you just try to catch second legs in general. 17 could be the second leg for 13 through 15, but I don't know. I think there's probably buyers below. I'm just not I'm going to sit out for a little while. This is a tight trading range on the open, and it's probably better for me to just not do anything. So I'm going to pause the video for a little bit until I feel, like there's something worth doing right now. Because again, this is just a tight trading range. I don't think there's anything for me to do right here. 22 can close on its low. That would be a short signal for me. 4 straight bear bars. Yes, this is a problem, but 2 hours of sideways to down likely after a bull trend day. However, I'm not sure how relevant that is since we started going sideways around bar 45 yesterday. We've been going sideways for 60 bars, so we might just continue to go sideways. 22 closes on its low. I am going to short it. That is what my system says to do. And, I don't know, 10, 12 points of risk. Trying to make 10, 12 points. But I don't think it's going to close on its low. If it doesn't close on its low, let's say it closes like this or something, or it's not a really, really good looking bear bar, then I will probably just end up selling the follow through bar. So if 23 is another good bear bar, then I would look to sell that. Assuming 22 does not close on its low. I wouldn't mind if it got a little bit bigger. You're pretty much betting on a breakout. Where could we go to? I don't know. If the Bears get a good looking breakout, it could get to around the bar 31 close yesterday would probably be the maximum, or the larger profit target, I should say. Not necessarily the maximum isn't the right word. Probably at least initially buyers somewhere down here. So this is one of those things I was talking about. With you get the climactic bar, probably better to try and sell the pullback. So 22 is a perfect example of what I'm talking about. I'm not, the 21 high, exactly. So traders probably try and sell the 21 low instead of this close. I just sold a little bit. I'm going to sell more. I sold most of my position, but planning on selling at the 21 high a little bit more. if it gets there, or the 21 low. So I did sell the close of 21. I actually got in at a better price because I ended up getting in during the tail. Sorry, the close of 22, not 21. And I'm going for the measured move to here. Unlikely that it goes straight to my profit target. It usually will pull back first. 80% chance second leg, 80% chance pull back first. So you can see probably more traders willing to sell here than down here because of the climactic bar, as I was mentioning. So 23, a good looking or a decent bull bar, might get a second leg. Obviously, the move through 22 is going to get a second leg, and as I mentioned, I thought there'd be more traders selling the 21 low than anything else. So head and shoulders bottom for the bulls, 112.23. So for me, I am just going to sit in this trade. I did sell, sorry about that. I did sell a little bit more at the 21 low. So I am short. And I'm probably just going to wait. We've had a pretty good rally over the past couple days. So, hoping that we get a decent move for the bears at least. My target, obviously, my stop is above 19, and my target's a measure move down. So here's my profit target, and my stop's right here. I think 24 is an important bar. If 24 closes on its low and is decently big, then that would be really good for the bears. And if this ends up being a bull bar and we get consecutive bull bars, I think that would be a big problem for the bears. I'm going to pause for a few more minutes. Obviously not what I wanted to see on 24 trading range, but I don't think much for me to do. This is probably a minor reversal, so nothing really for me to do. But sometimes the minor reversals in trading range are pretty deep. So I'm just going to sit in the trade and probably, if my stop if we get a bull bar here, it's not really a point in exiting from the math perspective. So probably nothing for me to do. I'll probably let my stop get run if it gets up there. This looks like we might be forming some sort of triangle. Playing with the concept of what I call, quote unquote go bar. Really, it's just the bar that, needs to work. And I think 27 is that bar. So I pulled my stop. I sold a little bit more below 27, just kind of experimentally. And I put my stop above 26. So, because reality is if we go above 26, my trade isn't really valid anymore. And so I think the trade needs to work pretty much now in order for it to still be a valid trade. So that's why I did that. But anyways, my stop is now here, and I'm going to order stuff down here. Most likely we'll get stopped out, and the loss will be pretty small, but 3 small losses on the day. Try not to die from 1,000 paper cuts. I'm short as much as I'd like to be, but some traders will sell the close of 28 because if we go above here, I just don't think the bear argument for another good leg down is valid. It's possible this is 1, pullback 2, pullback 3, but if it's going to happen, this is going to need to sell off really fast. So most likely we'll get stopped out and take a small loss. It would be 3 small losses on the day. Okay, I'm going to end the video here. 3 small losses on the day and, tight trading range all morning. So really not ideal for me, at least. But all right, that's going to be it for this video. And I will make a market review most likely on Monday, but there will not be one today.